Hi guys, welcome to the Chainlink session. So if you're new to this, these are the areas that I'll focus on talking about, and they are based on two key concepts. Before getting into the details, in every session you see this disclaimer: this is for education and research purpose only and not financial advice. Let's get into Chainlink. So playground zones. Pink one short term, white one long term. Right now, similar to the other four coins that I just talked about in the last 20-30 minutes, they are all trading right below the short term playground zone. And for Chainlink, it's a little bit better because we had a very dense bunch of candles around November, December last year. So this provides a little bit more support. So that's why in the past 2-3 days, the price closed above this line. If I enlarge it for you to see clearer. So it all depends on whether it will stay over there and there are positive news coming for it to bounce back to the short-term playground zone. The volume itself has shrunk quite a lot including today and yesterday. So that basically means probably a lot of people are waiting for directions, waiting for things to happen before they make the next move. But in terms of Wyckoff, we are actually seeking for a sign of weakness, another sign of weakness level. This was the first one. So we're seeking another low that can be a developing new trading range. So the new support line can be a new the bottom of a new trading range, and the range can be somewhere between like a very narrow range, but if they're really very good news, it can bounce back above the purple line, the automatic reaction line, and then started to trade within this range between the purple and the green line. So the green line is the resistance line set by the buying climax. If we look at what happened in the last distribution cycle, not the nearest one because it's a mini cycle with a lower high than what we have this time. I'm talking about this mega cycle in 2001-2002. So right here, I couldn't even show the upthrust of the distribution, so let me shrink it a little. So we have the buying climax, the upthrust of the distribution, all very crazy price spread. But here, we are still at an early stage. So last time, after the automatic reaction, there was a little pump, and then it was trading sideways for like 3-4 weeks before it reached its upthrust level. So we're still early in this cycle. Like after this little jump, we're 4 weeks in. So last time between the buying climax and the upthrust of the distribution, that's 48 days between these two events. So 84 days, we're still at 56. If it's 84 days, that's roughly beginning of next month. But right now, because we're trading at such a low level, and like I said in the other sessions, the macro sentiment isn't that positive, then it's not a surprise that the price returns to the long-term playground zone. Cycles happen, it doesn't necessarily mean it's a bad thing. it all depends on how you position your trades and set your stop losses. As long as you maintain your best practices, then there isn't a big problem. So last time the accumulation cycle over here lasted for roughly 511 days. So this was the last accumulation cycle. So if if we really have to wait that long, if it comes down in the next few weeks, let's say if it returns to this level in late March, another 500 days would be 511 days would be August 2026. So it's a very long accumulation cycle. So roughly a year and a half time. So let's see whether it will happen the same this time. So thanks for joining me on this Chainlink session. I'll cover Tron next.